Hello, everyone, and welcome to today's NinjaTrader ecosystem event, Liquidity Trading Strategies. My name is Patrick Hodges, and I'm a NinjaTrader ecosystem vendor relations representative. Before we start today's webinar, I do have a few housekeeping notes for everyone in the room. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email that you see on the screen now, and I'll enter those into the room for everyone as well. Lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link that you see there on the screen and clicking the Get Started icon or option under the Welcome section. You can also use the link that I've entered into the room for that as well. All right, before I turn the mic over to Rob, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. I'm going to go ahead and enter into the room a link for the full risk disclosure. So if you need more information or a copy of the full CFTC risk disclosure, please go ahead and click the link that I've entered into the room. Now, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. I want to thank you all again for joining us here today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Rob. Go ahead and take it away, Rob.
Thank you, everyone. Welcome to BuySide Global. This is Prab Prem Kumar. You can call me Rob. I'm so excited to share today. We cover order flow strategies for so many years, but today I'm going to talk about liquidity-based trading strategies. Particularly, we're going to talk about only level 2 data. Before we get started, if you have any questions, please type your questions in the chat. I try to answer it. If not, we'll get to in the end. But as soon as you have anything, please type it in there so that we know what to answer as well as what to cover in the end. Please understand the risks involved in trading. This presentation is meant for educational purposes only, not to solicit or not to sell you any investment here. Also, understand the risks involved in trading. Past result does not necessarily mean the future indicative. To understand the full risk disclosure, please visit buysideglobal.com/disclaimer. Today, I have a lot of things to cover, but high level, I wanted to cover like the 5 topics. I want to talk about what is liquidity in day trading. I want to explain a little bit, and also why it's important. Why it's important for you to understand how the liquidity controls your market price, because that's very important for you to understand the fundamentals and reason so that you can leverage the information for the trading. And also, we're going to talk about liquidity zones. Liquidity is different from liquidity zones. We are going to talk about all the trading strategies based on liquidity zones. We will talk about it in there as well. In the end, I think if we know liquidity and liquidity zones, most important part is how do we trade? What are information we need to look for? What are the setups we can trade? Those are the information. Also, we're going to cover the best possible setups that you can use in liquidity zones as well. And also, we're going to cover a little bit on liquidity sweeps, because liquidity sweeps is not the primary trading strategy for us, but you need to understand the liquidity sweeps for the other entries and exits as well. Of course, in the end, we're going to talk about the best possible offer for us, you guys, to get started today in the trading strategies. First of all, I wanted to thank you for everyone taking the time to attend the live webinar, because I know this is like a crazy times in terms of all the market, but taking the time, I said, coming here, listening to us for next 40 minutes, we are going to offer you the order flow footprint chart for one full year access. You have heard about a lot of footprint charts, but we have covered every single information that you need to find inside the information inside each candle. Doesn't matter it's stacked imbalances or like point of control or trapped buyers or trapped sellers, highest delta variances in terms of the money ball. We have all the information you can find in those um, footprint chart. You can get those, get the particular indicator for NinjaTrader using the link buysideglobal.com/free footprint. If you have your phone, pull your phone, take a snapshot quick so that you won't lose the link, because this link is where you can only get the discount. I'm going to type the same thing in the chat so that you know you have the information. Okay, so let's get started the presentation. What is liquidity in general? If you look up in Investopedia or anywhere, they will say in terms of how easily you can buy and sell the security in the market is called liquidity. But if you wanted to explain a little bit, if you, in terms of asset in general, anytime if you wanted to sell an asset, how fast you can sell, how fast you can buy with the best price possible, that's what called as liquid as asset. Talk about compare how fast you can sell the stock if you own the stock and get your money back, compared to how it's hard to sell unique art or unique painting, and also there's no guarantee the best price you can get. That's in general what is liquidity. But let's talk about the why it's important in terms of our market futures or like stocks. When there are a lot of market participants, the lot of buyers and sellers keep on trading at the highest interval. That means when you wanted to buy or sell your instrument, it doesn't matter it's a future or a stock, there will be a counterparty there. You will have a better chance of getting the fair price. That's what we call as market efficiency, right? So higher the order flows, higher the more orders coming in, more buys and sells. That brings up the liquidity in the market. When there are instruments like penny stocks or some other instruments which have very low liquidity, that means if you wanted to buy something, you cannot find the sellers who are willing to sell at the price that you're interested in. That lead to a lot of slippage, a lot of highest risk of getting into the position. So that's why liquidity matters more in trading in general. So liquidity controls the market price. I'm going to explain in a few minutes, but I want to understand liquidity controls the market price movements based on how much participant in the market, how much buyer order coming in, buyer sell order coming in. That's dictating some how the price moves, the volatility as well. Before I show you the how it works in the price movement, I want to understand how liquidity is created, right? So anytime every participant, every trading participant, whether you are as a retail trader or institutional traders or money markets, anybody who for the same instrument, let's talk about ES futures, right? So when you trade or when institutional traders trade or money market, everybody providing the liquidity in the market for the counterparty. So even though retail traders, one or two contracts doesn't make a big difference, we are dropping the ocean, but the biggest liquidity is coming from the institutional traders and money market makers and HFT algorithms. Okay, even all our orders create liquidity. Okay, for the counterparty. Let's talk about a little bit in terms of when it comes to the orders, two different orders, right? So whether you can place a market order or like a passive limit orders. So you can see in the screen right now to give a better explanation where anytime you enter the trade, in this case you enter long, the first, let's say you enter the market order, and then since you enter the market order, you're going to keep some stops below your entry and then keep some limit orders targets above your entry. If you look at that, everything provides a liquidity. Market order also, the two limit orders that you see in the screen provides a liquidity for somebody who wanted to buy as well because you're exit position. When you place those orders, even though those targets and those stops are passive limit orders sent to the exchange, already in the exchange, everybody can see it. How can they see it? Because when you send it to the exchange, all the participants in the market can see the data through level 2. Okay, what do I mean by that? I had two different screens. Most of you, how many of you have level 1 data, level 2 data both? Because if you go to level 1 data, all you can see if you go to the super DOM, the best bid and best ask, and then the current price. That's it. You can't see anything more than that, right? But when you have a subscription to level 2 data, you're going to see all the passive limit orders sitting in the market at aggregated at each price level. For example, right now the price is, let's say, 55.21.75. When you can see 111 pending limit orders ready to sell at this price. If the price reaches that particular level, it's going to execute, convert into market order. That's how we can see the level 2. If you can go back to the previous screen, these targets above the price, that's what you see on the level 2 data on top. So market aggregates everybody's and then gives you the total number of market liquidity, both above as a ask, below as a bid, right? So since most of you have level 1, you can't see level 2, you need to upgrade your subscription to see the level 2 data. Okay, so little bit of information about what you see here. The current price is highlighted as yellow right now. Any passive limit orders sitting above are called the bids. The topmost bid is called the best bid, and the lowermost entry is called best ask. You can see the ask as well, right? So let's talk about how the liquidity, how the level 2 information, how these contracts sitting in the DOM right now impacts market price, right? That's what the foundation behind our strategy today. So let's say that I have same exact instrument, same exact price level, but the different I have here, different liquidity. When I say liquidity, number of people wanted to sell at each price, all the contract sizes. Here I have less liquidity. Here I have in 200s. Let's see how it really, how it controls the market in terms of the market price, right? So let's say in this situation, if somebody places a market buy order for 500 contracts, so once it goes to the exchange have automated matching algorithm. What it does, as soon as you see the market buy order for 500, it takes the first 11 here, next 13, next 9, next 12, until it's able to grab the 500 contracts. So to supply the 500 contracts market order, it has to go through all these contracts. Once it reaches here, they are able to grab 400 and let's say 77. Remaining 28, they can take it from here. So that's why I see when they have less liquidity in the market, prices moves very, very fast up. Think about same situation, same price. The difference is liquidity is little bit really, really strong liquidity in the market. Same 500 market buy order, right? So difference. Same 500. Now, once we get the 500 market buy order, price, but what will exchange do? They will grab the first 289 contracts from here. Remaining 211, they take it from here. That's it. It will move only one tick. If you can see, the same kind of market order comes in based on the liquidity in the market, based on the level 2 information, how much price moves or price jumps or it does not move at all. It all depends on how much liquidity in the market based on level 2 data. Are you guys with me so far? If you can understand what I'm trying to say, if you have any questions, if you can understand, type yes. Any questions, please let me know. Okay. So let's move on. When it comes to liquidity here right now, but not all liquidity matters because the numbers are, if you look at the super DOM in live in the market, active market duration, these numbers are keep on changing every single second, very, very fast. There are some lower numbers. You can see there are higher numbers sometime. But how do we, in order to trade it, we need to see the strongest price levels, strongest liquidity levels. Those are the places where the actual price action happens. That's why not all liquidity matters. We need to focus only on the largest, persistent, concentrated liquidity block that really matters. But the problem is you cannot really grab the analyze on these screens. Level 2 screens are super dumb. Why? It's changing very, very fast. It's changing at very high speed. Okay, that's why we created the liquidity zones. Whole topic today is all about liquidity and liquidity zones. We created the liquidity zones indicator called BSG liquidity zones. It takes the level 2 data and trying to plot the best and then the persistent, consistent order blocks. There are a lot of level 2 indicators out there, even bookmap. I have two screens here. One is bookmap, one is the any other level 2 market depth data. You can ask me, what is the difference between these market depth tools like bookmap or indicators compared to liquidity zones? Market depth indicators show every single number. Do you see this? Every single number, it takes all the information, trying to plot that information in a visual way. That's it. That means it tries to plot those numbers, highest number in red, lowest number in blue, something like that. They are more like a visualization tool of current market depth. That's why it's called as market depth indicators or market depth tools. But we are not interested in all the liquidity. We wanted to find out which is the most important, persistent, consistent order flow that we can rely on. That's why we have to have the algorithm based filtration system where we need to analyze those numbers in a real time, very, very fast as they are changing. That's why we take the market depth data, we apply our algorithm, we try to plot only the most important liquidity data. That's what we call as liquidity zones, strongest liquidity zones. Okay. So another question is like a range chart. We recommend 1 minute chart, a 5 minute chart. We'll talk about in the end why. So again, this is how the screen look like. But you need to focus on only on the green lines and red lines. Ignore the purple and blues. The reason is that these green lines represent the strongest bids liquidity data, as well as the red lines indicate the strongest sell bid ask orders from the liquidity data. And then more high contrast means highest concentration, more dimmer, it's like less concentration. With that information, we're going to find how we can use in trading. So now you understand what is liquidity, what are liquidity zones, how based liquidity zones indicator gives you the best possible persistent, consistent liquidity data. Now, when you talk about how the trading strategy works in terms of what are the ways I can trade it, because having information different, the important skill is how to leverage the information what you have on the chart, and then will it help you to make the trading decisions based on those information. So we wanted to give you a couple of simple trade setups that you can start using, practicing right away. We're going to talk about the third one also, but we recommend the first two are the most easy to learn. In nothing is easy, but easier than compared to other complex trading strategies. We call this as buyers taking over sellers control after breakout, or sellers taking over buyers control after breakout. Essentially, it's a breakout strategy, but the key important information is how the breakout happens. Do you remember the screen that I showed you, the liquidity zones, red zones on the top, green zones on the bottom? It signifies the same thing. When the price moves in the sideways, you can see the topmost liquidity ask zones, liquidity zones, and then the green zones here. Price stuck, eventually it will go sideways. Once it breaks out, and then on a pullback, you should see the exact swap. On a pullback, you should see the seller's control swapped into buyer's control. This is what we're looking for. Anytime we can see the seller's control was lost, and then buyers are taking over the control. That means buyer control was here before, and then they are moving the control a little bit up where the sellers initially were. That's when we're going to find the entry. This is what we call as the setup one. Buyers and control swapped completely. Okay, exactly. Now we looked at the strategy wise. Let's see how we can identify those opportunities in the chart. If you look at here right now, you can see the seller's control, buyer's control. When the market opened, seller's control was right here. Okay, let me highlight it right now. So you can see the seller's control all here, buyer's control all here. Even though market is moving, they were just buyers just stayed there, sellers stayed there. But if you can see, first time the seller's control was broken, and then buyer taking over. This is what we're looking for. Anytime you can see this kind of opportunity, that's what we are referring to the setup. Sellers control replaced by buyers control, or buyers control by sellers control. Okay, so let's look at in terms of how many opportunities we have in this chart. Okay, so first one, okay, number second, again sellers control broken, replaced by the buyers control. Again, same thing, broke out, broke out, broke out. And then on the reverse side, you can see now the buyer's control was on reverse side broken out, seller's control was created. So this is an opportunity for a short trade. One more important aspect is that I want you to watch out where you keep your stop. If you're taking this short trade, always keep your stops like 5 or 6 ticks above this particular this will be, because the price can go and then take the liquidity and go back as well. So not liquidity zones not only help you to enter the trade, also is going to help you in terms of where you can keep your stop based on the way we call it, hiding your stop behind the liquidity. Because what does the red line mean? There's a lot of sell orders sitting right there. If your stop is right there, if the price goes back, in order to take your stop, then you go through all these stop orders. That's why you are hiding your stop behind the stop order. I guess with me so far. This is why it's very powerful to hide your stop behind the liquidity. Okay, so okay, so let's move on. And then let's talk about quickly about the setup number two. Setup number two is similar to setup number one, but one small variation. Okay, we saw the setup number one where price breaks out of one control, opposite control is created. You can see the red to green or green to red, right? But sometimes the swap won't happen, but still you can follow the trade. What do I mean by that? In this case, you can see the price was stuck in there. It broke out and then pull back to same level. But even though there is no credit, but we can take those trades as well. Let me explain you in the steps as well. Let's say price got stuck here, price breaks out. Don't take the trade yet, because always there will be a pullback. You need to know it's a false breakout or real breakout. So wait, there's a pullback. Don't enter again, because it can go back into the range again. Don't enter yet. Okay. And then once you see the reaction going back in the direction exactly or plus or minus near the exact previous control was, that's when you're going to take the trade. Are you guys with me so far? The only difference is you won't see the green line here compared to strategy number one, because we wanted to order the strategies based on the best probability. That's why number one is the better compared to two, but still two happens a lot during the day. Okay, let's look at in the chart how you can identify those things. Okay, so if you can see right here, let me draw that out again. You can see the price was fluctuating. Buyer's control was here, seller's control was here. Price is stuck over there, but after some time the price really broke out, came back to the exact same level. Which level? Where exactly the seller's control was, and then moves back. Okay, same thing, broke out, come back to the same level and then move. Same thing, do you see this one? Broke out, come back to the same level and then move. Strongest liquidity, look at the strongest liquidity, came back to that level, pull back, look at that move. This is what we're looking for in terms of how we can find the breakout, retest, and then move in the same direction you wanted to take the. This is number step. What we have as setup number two. Do you have any question that I'm missing here? Okay, so green to red concept looks. Colors, you more and more you watch, you will see those colors. You see the high contrast, those things. This is a kind of setup where you need to watch the screens, practice yourself. You will be able to identify much over a period of time. Is it clear that lower volume in the markets? We also trade gold, crude. It's not just ES or NQ. We trade the same strategy for most of the high liquidity markets like crude, gold, ES, NQ, even stocks, even Tesla's or like Nvidia, even stocks also. It does not have any arrows, anything like that. It will just have those liquidity zones you have to trade. Okay, so let's talk about liquidity zones quick. Okay, what are liquidity sweeps? Liquidity sweeps is, we saw the breakout. We said price breaks out and then retested. Most of the time on a choppy market, price won't break out. It goes up, take the liquidity and then return back, right? How many guys of you guys have issues of fake breakout, and then you saw the breakout, you took the trade, turned out to be false breakout? Guess what? You can find those kind of false breakouts much more clarity in level 2 data. Let me show you some examples. Okay, so most of the time price pushed to grab only the liquidity and then come back. That's what we call as liquidity sweeps. Price in the range goes to the edge, takes a liquidity, come back again. Okay, you can see just a wick sometimes. Let me show you some examples. I have two good example, good sweeps. If you look at the first one, price goes there, there is strong liquidity, goes there, took the liquidity and then come back down. Here, same way, prices came back. First time, look at this, it came very close. That is not a liquidity sweep. That means it just came close, pull back. A lot of times when the people see like, oh, it came down and then pull back, they enter the long. Now, you need to see the completion of the liquidity sweep. In this case, this is not liquidity sweep, this is. Now it came back, took the liquidity and the reverse. These are two good examples. Let's look at the bad examples. Price goes near to the liquidity zones. It's not, didn't even touch it, didn't even take it, but going down. That is not a liquidity sweep. Okay. Again, price coming down, coming close. It came almost 4 times. It didn't even take the liquidity. It didn't even sweep the liquidity. It just reversing. That is not a liquidity sweep. You need to know what is a good liquidity sweep. Okay, this is one of the choppiest day. I want to show you on a choppiest day, market will be ping pong between those edges. That's what on a choppiest day, because they market makers take the liquidity on the top, take the liquidity bottom, take the liquidity top, take the liquidity bottom. So to show that, I highlighted those liquidity sweeps. Look at the liquidity sweeps, liquidity sweeps, liquidity sweeps. You can see the sweeps during the choppy days. They go to extreme, take the liquidity, go to the opposite liquidity, and then they do ping pong back and forth. That's what happens in the trading. So the next question is, if it is this way, how can I trade it? So let me show you this particular day where I have both combination. If you look at this particular chart, where when the market opened like this, sellers liquidity, buyers liquidity, broken out, you can see the setup number 1. What is it? Sellers became buyers, price move. But look at this whole market here. It is just choppy, but most of the traders don't know how to trade. But now, if you look at that particular with in terms of liquidity, you can see first trade, and then I wanted to look at the liquidity sweeps. Exactly 1, 2, 1, 2, 3. We can see the liquidity sweeps because that's what market does always. Let's look at the trending days in terms of how we can trade on the trending days as well. Every time there's a trend, how many of you guys struggled? Should I enter now, or is it already too late? Should I enter now, or is it like a fear of missing out, or like what happened? So in those cases, anytime the prices to come back to the strongest liquidity, you can take it. You can see right now, even those cases. Okay, let me mark it down. Every time the prices moves, there will be a liquidity formation. Anytime price comes to that level, you can enter long, put your stop here. Look at the price strongest pullback. There's a liquidity sweep. You can keep a stop here, go the direction. Where did the really reverse happen? Where there's a lot of liquidity, lot of sellers. That's when the market reversal. Again, liquidity sweep, setup number 1. I know I'm trying to rush because I'm trying to get through more data before our time. Okay. Any questions so far? Anything that you want to talk about? We talked about setup number 1, setup number 2, and then liquidity sweeps as well. Okay. So how are you doing the time right now? Okay. It's most common questions. A lot of the times people talk about in terms of, is the market manipulated by large players, right? I think they talk about, does institution hunt my stops? Is it a thing? stop hunting. How can I avoid getting my stop hunted? These are the very common question. What is induced liquidity? These are the common questions. Let me show you some examples here in terms of liquidity sweeps. If we understand it, even though the market is going down, you can see the bias control was keep on breaking. Every time you can see the market's going down, liquidity is created. Liquidity sweep. That's the opportunity for you to enter your trade. Market's going down. This is called induced. Okay, let me talk about it very quickly. Induced means when the market, like on a downturn, market is going down, a lot of traders enter the trade. When you see a lot of liquidity, these are stops of other traders, right? So they will do, what will they do? They'll try to go back to the nearest place, don't even touch the liquidity, they come back down. Once they see the price's reaction, what will the traders do? They're going to enter the short again. And then what will they do? They go back and take all those stops and then go in the direction. This happens. Look at this, how much liquidity sweeps happen on both sides. This is why I want you to see the market where the lot of stops are. If you are going to trade it in the direction, wait till the liquidity sweeps is complete and then you can take the trade in either way. Okay, so in that case, let me highlight you some of the liquidity sweeps. If you are trading liquidity sweeps, what are the trades you can see the liquidity sweeps which worked. That means every time there's a liquidity sweep happen, it goes the opposite direction. That's what I'm saying it when I say worked. Liquidity sweep goes down, liquidity sweep going up, liquidity sweep going down, liquidity sweep going up, liquidity sweep going up. That's what I meant by when the liquidity sweep worked. But nothing is perfect. Nothing is 100% in trading. I'm highlighting all the places where liquidity sweep going to opposite direction, opposite direction, opposite direction. I'm showing you every single liquidity sweep during the operation. But I want to show you even sometimes it does not work always, which I'm marking. These are the places, even the liquidity sweep happened, still market continued in the same direction as well. Whole important step I want to read is that liquidity and the level 2 data are the most information you need to learn, analyze, watch the charts again and again, look for the patterns, look for how the market. So how many of you know the primary goal for the market makers? Market makers' primary goal is to provide liquidity in the market. So think about they wanted to just because this market is falling right now, market is falling right now in the market right now. That means there's a lot of sellers. That's just sellers. Think about what will happen to the price when there are only sellers in the market. Price will drop like crazy. There are no buyers, just sellers. So in that cases, there is no market efficiency. That's why to bring the market efficiency, market makers provide the buyers. When the market is falling, they will become the buyers. They'll provide the liquidity for the sellers. Why? If you want to sell, there should be a buyer, right? That's what called as liquidity. These market makers. So in this case, why sellers goes to take the liquidity? Because they buy this and sell it here. They buy and sell here. For them, they are not really trying to take your stuff. They are not targeting you. For them, they're taking the quantity from the contract from the top, selling at bottom. They're providing the market efficiency by focusing, hunting the strong liquidity zones. Okay, so they are not hunting your stops. They are not trying to target the retail traders. They are not. Their goal is to provide market efficiency, trying to find the best places where they can buy in bulk in one place, sell, provide it slowly with a sell or buy. They provide a market efficiency. Okay, are you guys with me so far? Okay. Yellow candles is a different indicator. I should have different screen. Okay, so the most important point is market makers and HFT algorithms are purely based on liquidity data. They are not looking at because those algos really runs very fast buys and sells and very fast, like highest speed. They don't buy and wait for 5 to 10 minutes to close the trade. They buy and sell very fast. All those algorithms is analyzing those liquidity data, level 2 data. Actually, I don't want to call level 2 for them, because for them, they even have the level 3 or level 3 plus data. Let's not talk about it right now. But all they look at the market liquidity. They are not looking at the candle patterns. They are not looking at those historical charts or RSI or MACDs. No, They look at the liquidity, they look at the order flow, buying pressure, selling pressure, and then they provide the algorithm. So I want you to watch and learn how the liquidity sweeps happening, how the market is like not manipulated, how market efficiency in the market. Okay, we small traders cannot beat the institutional order flow or institutional trading, but if I try to understand how their system works, how they're making the moves, how they are playing the game, we can play with the same game. If they are going long, we can go long. If they are going short, we can go short. By looking at those liquidity sweeps, looking at the breakouts, looking at the strongest liquidity zones. Okay, that's why it's very very important for you to understand how those trades works. Okay, um, so we talked about one particular indicator, BST liquidity zones. For this indicator, you need to have the level 2 data. Most of you have level 1. You need to upgrade your market data subscription to level 2. It doesn't matter whether you are with NinjaTrader account, you go to dashboard, NinjaTrader, you will be able to upgrade your subscription to level 2. Or if you are in Rhythmic, if you are if you are in like a interactive workers, wherever they are, wherever you're getting market data from, you just need to upgrade to level 2. So you will have all the passive data, out of flow data indicator can read. So once you have level 2 data, you can use our indicator. The link to get is like liquidity zones. The price right now, if you go to the website, it is like a monthly subscription or annual subscription. Monthly subscription is at $89 per month, but we wanted to give you the best possible way for you guys to get started. So our special offer for today for the webinar is go to the link buysideglobal.com/nt for NinjaTrader. Grab your phone. I think you can grab your phone, take a picture, because you need this discount code. You need this link to get access to our system. So if you are purchasing today, you're gonna get 50% off for first 2 months. Why first 2 months? I want you to watch the charts again and again. Look, and then we're gonna provide you the videos, what to look for. We're gonna provide you the strategy videos. We're gonna provide with some of the review of the trades we took, as well as some of the explanation of what we saw, how to read it. All the information we're gonna get as videos when you purchase a subscription. I want you to understand, practice, and also you'll get access to a Discord channel where you can ask questions, take a screenshot. I think this is this. What do you think? You can ask questions. So, indicator plus the videos, trainings, and then recordings of our reviews, trade reviews, day review, chart reviews. Also, access to the Discord channel to ask any questions. First 2 months is critical for you to practice again and again. That's why we wanted to give you the best way to enter 50% discount. Use the discount code Santa. Make sure you go to this link buysideglobal.com/nt. Any questions, please reach us at email or of this phone number. So I wanted to finish with what our customers say, because whatever I say doesn't really matter, right? In the end, how our customers feel and how our customers using system. You can talk about, we had two popular products. One is supply and demand system, trading system, and the liquidity zones. Both are very powerful, but for us, best way to start is that looking at the RFL data. Liquidity zones it works on any instrument, stocks, futures as well. Okay, you can tell a lot of customers whoever started you, even though they have other strategies, other trading entries, everything, still, if you look at those kind of liquidity zones, is going to give you the confidence in terms of how much liquidity is there. Now buyers are coming in at the highest quantity. That means I'm on the good side. Or after you entered short, like there are a lot of buyers coming in. Oh, I need to try to exit. You will see more and more information by looking at those liquidity information on the chart based on level 2 order flow, real time based on buying and selling pressures. So that's why um, liquidity zones is something you can start with it. So let me look at any questions. I think I'm on time. We have 5 minutes. Let me see if I have any questions. The liquidity zones is going to give you the lines, the red and green lines bottom. It won't color the candle. I think my screenshot, the candle coloring is from different indicator. So you need to ignore those coloring. Okay, these are all potential trade. That's okay. And then I can use them strategy. No, we cannot use in strategy builder. This indicator is only for the manual trading only, because these indicators are painting those colors on the chart. There is no markers or anything for you to build your own strategy. No, this is meant only for manual trading. Other questions are, does it have any arrow or dot? No, it will provide the liquidity zones as a line, red line for a seller's control, green line for buyer's control, and then you have to follow our how to read it. All the videos will be there. What to see, what is a breakout, what is a false breakout, what's a retest. We'll give you those videos. NQ gold crude definitely, but there are some futures with no volume and all. I don't think I don't think it will be there. No. Okay, what else? Look, I think I covered all the questions relevant to the topic. If there are any other questions outside this product, you can email us at info@buysideglobal.com, or you can call this number during the business hours. Can I change the color from green to yellow? Yes, of course. Default color is what comes with green and red. If you wanted to change it, if you hate green, you want to put it white, put it white. It's up to you. Because particularly if you are using the white background, you want to see the contrast, it's up to you. But you have full control. You can pick the colors whatever you want. Okay. Is there anything else? Level 2 data, I think you got to check your provider, whether if it's India. Ecosystem. Patrick already replied. Thank you. Okay, so chart wise, can I use it on range chart or tick chart? We recommend 1 minute chart. I want you to see the liquidity as and when it happens. You can trade separate chart, whatever the tick chart, volume chart separately. To see the liquidity data, to see the breakouts, to see the opportunities, we would recommend all our training videos are based on 1 minute chart or 2 minute charts. Okay. I think that's all I have. Make sure you grab your phone, take a screenshot, and then, okay, I think I covered all the questions. Patrick, thank you, Patrick. That's all I have.
All right, thank you very much. Well, I want to thank Rob for taking the time to share that information with us here today. Everyone in attendance for today's event will receive an on-demand recording via email, so keep an eye out for that. If you did enjoy today's session, we hope you'll join us for future webinars. Follow us on social media for any alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this webinar here today was that of BuySide Global and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Please enjoy the rest of your day. Happy holidays from all of us here at NinjaTrader. We hope to see you in future webinars, and happy trading as well from all of us here at the NinjaTrader ecosystem.